Hi, Anik. Hi, Daniel. It's wonderful to see you again. And one of the pleasures of this year that we get to talk, regardless of where we're located physically. And Daniel, if you remind our audience a little bit about your fund, and then Anik, you will do the same, just a minute or two, so that the audience remembers who you guys are. Daniel?
Sure. Yeah, thank you. Thanks again for the invitation. Pleasure joining you guys. I'm the managing partner of Mindset Ventures. I'm personally based in São Paulo, Brazil. We're a Brazilian-rooted fund that invests in startups from the US and Israel only, and then actively support these companies expanding to Latin America and to Brazil, more specifically.
Anik?
Great. So I'm a managing director at BGV. We're a early stage VC firm with about $3 million of assets under management. And we invest primarily enterprise early stage seed and series A. And we tend to invest in companies out of Israel, out of Western Europe, and out of India. And we basically bridge them to Silicon Valley and help them basically build global businesses.
Yeah.
Based in Palo Alto, California.
Yes. Now that the year is almost over, it's December. Can we think that this is like the year is over and whatever happened in 2020 will just be gone, and the year 21, when it comes to investments, will bring the whole different perspective, or we'll go back to the way we invested? So that's where we'll start, because 2020 has certain trends that I personally have not seen before. And I wonder, from your perspective, you've seen something unusual for the investment behavior this year or not? Or was it the year as usual?
I think, I can go if that helps first here, Sasha. One thing that's really important, and what we are seeing as we take a step back, is that some real powerful forces are reshaping enterprise work as we know it. I think the pandemic is a big one, and it's basically really inspiring remote and distributed work model. We're also seeing an acceleration of adoption of cloud and AI technologies. And we're also seeing the expansion of the workforce to include, gig talent. And this is kind of promoting what I would call a digital first operating model and how people work. I'll say a little bit more about it. And it's really redefining how work gets done across whether you're white collar, working in sales or marketing or engineering, or you're blue collar, you're working in a manufacturing plant or in logistics or distribution, or you're a gig worker. And I think what's interesting about it is we're seeing that enterprises are really embracing transparency, openness, visibility, and shared outcomes. I'll give you an example. Given the travel bans and all the stuff that's happening right now, a lot of portfolio companies cannot make direct sales calls. And what we're seeing is many of the enterprise customers are spending 85% of their time on actually evaluating products through POCs, getting information through the internet, and only getting to the place of having a face-to-face meeting when they're close to making a purchase, and sometimes even not then. So I think that's a digital first sales operating model. And to make that work, you need a very frictionless engagement. And this is driving kind of more of adoption of bottom-up sales motion that, to be honest with you, I really haven't seen at a scale of what's really happening here. And what that means is, relationship selling cannot be ignored, but you cannot take the traditional old approach of trying to sell here, because the traditional sales motion has been turned on its head. So we're seeing that actually being a major thing that's happening. We're also seeing, we talked about the pandemic, it's really kind of imposing a reimagining of the workforce and accelerating kind of distributed hiring. I'll give you an example. One of our portfolio companies, Platform.sh, they're about a 230-person company. They have employees in 33 countries. And what's interesting about them is the fact that I was talking to their CEO, Frederick. He's based in San Francisco, I think maybe 3 weeks ago. And I was asking him, how this is all impacting him. And what's really interesting is he said, well, in Q3, I was trying to hire 20 new employees, and he removed the restriction on where people could work from in his company about 2.5 years ago, before the pandemic hit, even before the pandemic hit. And he asked me, guess how many applicants he had for those 20 positions? And I said, well, I don't know, 800, 500. He had 6,000 applicants, right? So I think this whole notion, this whole notion of shifting to work from anywhere is following a natural progression. And I think more enterprise adopting technologies that enable them to do that, whether it's automating call centers, whether it's customer success stuff, whether it's on customer journey. So we believe that this is going to happen more and more. So I think it's, yes, the pandemic has happened. Yes, changes are happening, but fundamentally we believe how work gets done in enterprise is just getting redesigned and reimagined. And I'm not sure we'll ever go back to the, 100% of the old world. It'll be some mix of what's happening now versus how we used to work before, but it's a big change.
Yeah.
Yeah.
What's major? Yeah, Daniel, do you see the same with your companies?
Yeah, I totally agree with Anik's point. I think, first of all, the thing's not over, right? So you said, are we closing the year and starting a new one? And I'd say, actually not. I think it's a kind of a continuity. And until, everyone can travel again, everyone has the vaccines, etc., will be like a continuity of what we've been seeing now. But the main point is the dynamics of both investing, hiring, recruiting, working remotely, everything has changed, as Anik was mentioned, right? And I'm really confident that we're not going back to the old way. I'm not going to say old normal, because who knows what normal is, right? But the old way of doing, I think the new way would be kind of a mix of what's happening now and what happened before. So I also have some interesting examples about companies. We invested this year in a company that is doing amazingly well called Turing.com, and they help big companies hire pre-vetted software engineers remotely, right? And of course, this was already a big pain point of finding good engineers, software engineers, because it's a very expensive resource and scarce, etc. But doing that remotely, now that everybody got used to working remotely, has impacted very, very positively the company, and they have really grew a lot this year. Another company of ours, well-known, called Brax, has also moved to being a remote-first company. So they are completely remote now. They have offices that work like hubs if people want to go to the office. But the founders left San Francisco and moved to LA now because of the cost of living and other stuff. So it's interesting how the dynamics, also I think in Silicon Valley and other regions in the US, will change because of what we see now. And we all had to learn to do investments through Zoom, right? Which is interesting for me, at least. I like to, look entrepreneurs in the eyes and visit the companies and talk to people. And now we had to do everything remotely, which is initially was kind of odd, but now we're kind of getting used to it, and things need to continue to happen, right? And I think one of the insights here is, I think when the pandemic really hit hard in March, April, February, etc. this year, most of the investors actually froze their investment activities, and you saw a big decrease in investment activity, new deals, valuations went down, etc. But we just got the numbers last week from PitchBook, etc., that showed that the activity in VC this year is already past last year, right? In Q3, accumulating Q3 without even...
Exactly, that was my next question. How is that possible? When I talk to an entrepreneur
coming out,
right, and the early stage deals, they all complain that it's how hard it is to find an investment capital in the early stage. And then you look at the numbers, be it the PitchBook or NVCA that posted them, and it exceeds the numbers from the last year. So what do you think is happening? I'm thinking it's just the big funds are writing big checks. That's what's driving the numbers. But when it comes to early stage deals, do you see, because you both work with early stage companies, so would you say that in your sector, I mean size-wise, things have changed? Do you make fewer deals, or is that in that sense life as usual when it comes to numbers?
I think what we're seeing is I'll tell you a little bit data that we've basically seen early stage. So if you look at the total number of dollars invested in Q3 of 19 after in 2019 is about 1.9 billion. In Q3 of 2020, it's down to about 1.1. So there has been a dip if you look longer term over time during the heydays. But what we're basically seeing is there's an opposite thing happening in growth stage and late stage. Fewer deals, but a lot of capital going into those deals. So I think what we're seeing is people are doubling down on the winners on a scale that we have never seen. I mean, if you think about mega deals, the median Series A investment size, I'd say 3 years ago, was about $16 million. Now it's $30 million in terms of valuation. The average Series A deal size used to be about 6 to 10. Now it's 10 to 25. So it's interesting how people are doubling down on kind of the better companies. But I think at the end of the day, Daniel made a very good point. It's been a challenge to invest in early stage companies because so much of your diligence is your face-to-face interactions with entrepreneurs to get a sense of who they are. And what we're seeing is there's more of a bias towards entrepreneurs that VC firms have worked with before. They're able to raise money faster. And then also people are getting creative. I mean, we've made, I'd say, 4 investments in the last 6 months. And, for one of them, I remember one of my partners actually went for a walk in, the Berkeley Aquatic Park for 4 hours with the founder outdoors and really kind of talked through different scenarios, trying to get a sense of the person and what it was. I know one of my partners, Eric Botois, we are closing a round in this financing round in a company in France. And he happened to be in Switzerland. He took the train across and he met them somewhere in an outdoor cafe and they spent half a day talking. So I think you have to be more creative about how you do it. But I fundamentally believe that what we're seeing, the quality of the entrepreneurs has gone up. We are not seeing a slowdown in the number of deals, but I think what we are seeing is people are taking a little bit more time to do investments. I'm not sure there's many deals that are getting closed within 4 weeks. It's taking people a little bit longer time to raise money, especially if you're a first-time entrepreneur.
Right.
Yeah.
Right.
No, I totally agree with Anik.
Yeah, go ahead, Daniel. Go ahead.
Just to make a point here, I think I agree with Anik. I think the pace has not diminished. I think it's maybe taking a little bit more time just because of this changing the way we diligence, we spoke to founders, etc. So, and I think Anik is very, very correct when he talks a little bit about the bias, right? It's easier for us to make decisions a little bit biased of the people that we already know, have some relationships just because of the social distancing stuff. But I think what's happened is that the bars went up a little bit, right? So it's been harder and harder for first-time founders and for people without experience to raise money, just because it's such a competitive market. And VCs are aware of the risk and they know the downturn that went through COVID. So they're just raising the bar. I think it's a very fair statement to be made. And I think, Sasha, just to your point again, one thing that can help explain on the increase of the amount of dollars that went through the VC market, the IPOs that are coming soon, etc. I think it's the overall excitement with technology, right? So if you look at technology more broadly, you see that this is actually what sustained our lives during the pandemic, right? So if you look at the speed that we're developing and testing vaccines, it's due to technology. The way we're doing this thing and talking to our friends, etc., is due to technology. The way we're entertaining ourselves at home, it's technology. The way our children are being educated now is due to technology. So I think there's an overall excitement for the market with technology and the way that people realize that technology is not coming back, right? It has changed our lives. It has changed the way we do things. So, and that reflects in all senses, right? If you look at the stock market, for instance, for tech companies, you've seen never seen such a fast growth as you saw this year with Amazon, Google, Facebook, and all these companies. So it's impressive, and there's an overall excitement with technology overall. And of course, that goes to venture capital, that goes to startups, that goes to tech entrepreneurs. So there's an inflow of capital because of that, I guess.
Yeah, and if you look at the flurry of IPOs, if anybody told me even a year ago that DoorDash will get the valuation they're getting, how is that possible? And now they're all slated for next week, I think, right? DoorDash, and Robinhood, they just announced they got a Goldman as an underwriter. And then Airbnb. Okay, let's talk about Airbnb, for example. That would be when this whole mess started, no travel, people not knowing what will happen to that particular business, and they lost employees and a lot of money, and they are recovering somehow, right? So let's talk about what we call here on this pivot, right? Where are your companies pivoting? Will you give an example of what one of your portfolio companies was doing prior to 2020, and to stay in business, they had to change totally? Can you give us an example of one of your companies that you work with?
Yeah, so I'll give you an example of a company that was challenged. So we had a company called Blended. It's a robotics company. And what they were basically doing is they've come up with a robotic kiosk that allows you to make organic kind of smoothies, but it's a 10x productivity to any kind of manual way of doing it. And they were actually getting ready to be deployed at, retail shopping malls, at San Francisco airport, at Google, and all these different places, in March and April. Well, guess what? When people stopped working, that all went south, and they had a big challenge. And what they did was, I think the resilience of the team was unbelievable, because they actually pivoted to contactless food delivery. And what they just did, they did 2 openings at a Walmart, huge success about 4 weeks ago. They just did a launch with Jamba Juice, because now more and more people want to go to a place, but they don't want people preparing the food, right? So it's an interesting. I think that was the company that was hit the hardest. I think what's been interesting is we've also had companies that have had very strong tailwinds. So, for example, we have a portfolio company called WebScale, just closing a Series C round right now. And what's been fascinating is they do infrastructure as service for e-commerce businesses, and they help them shift their e-commerce applications to the cloud. And what's interesting is, if you think about e-commerce, over the past 5 years, e-commerce has gone, 8 years, e-commerce has gone from 0% share of retail to about 15% share of retail. In the first 8 weeks of the pandemic, e-commerce as a share of retail went from 15% to 27%. Wow. In 8 weeks. And so this company is doing their customers are doing Black Friday volumes every day. And so literally these guys are on fire. I mean, they're going to end this year, literally about 40% over plan. And no one could have thought about it. And so they're doing very well. The CFO, Sonal Puri, is a woman CEO. She's exuberant about kind of the tailwind she's getting, and they're growing like a weed, and they're doing great. But those are 2 examples of, the good and the bad, so to speak. So everybody's got a mix of both.
Yeah. Yeah, Daniel,
I think there's some companies that are actually benefiting from that, right? So everything that do services that are enabled or fostered remotely are ones. Everything that relates to streaming, gaming, delivery, etc. All of those were fostered, and of course companies that, especially the ones that had to do with hospitality and travel tech, and all these guys were really in difficult shape. We don't have many of those companies in the portfolio, gladly, but you gave an interesting example of Airbnb, right? You saw the comeback, right? So they were in very difficult situation at the beginning. Now they are coming back. They're doing IPO, very good terms, and I think it's part of the way travel will be the future, right? You don't want to maybe go to a hotel. You don't want to go into places that a lot of people have been and be crowded, and just want to have your own space and make sure it's clean. So I think Airbnb has an interesting model for the new world.
Right? And the capsule should walk with you everywhere. That's what it looks like.
Yeah, exactly.
Right. Okay, speaking of the trends now, can we, predicting is not a good idea, but we'll try. We know the year is over, but in my mind, it's just the beginning of the new, I hate to say it, a decade, that the things will have to change about the way we live. are here to stay. And we know if we look now, the booming industries are gaming, AI, various delivery. Amazon, of course, is our everything these days. But I know that your funds specialize on whatever you do well for decades. And are you going to change your investment focus now that life has changed so dramatically? Or will you stay true to the industries you've been working with for a long time? Like, Anik, we'll start with you because I know that you're passionate, but actually you tell our audience what your focus has been and are you going to change that and do the gaming instead? Will
Sure.
you?
I think we're not going to go that radically different, but I would say we are seeing a few big trends. The first big mega trend is acceleration of automation. When people are being asked to cut their cost structure by 30%, there's only one way to do it, it's automation of workflow and processes. That varies by industry. So for example, retail, I gave an example with web scale. Logistics, we've got a portfolio company called Flightrex that does last mile delivery, which is getting tailwinds right now. Healthcare is a big one that's getting it with remote healthcare. And to be honest with you, we have never invested in healthcare as our strategic focus area. It's going to get a lot of tailwinds, but we're not going to go into it. Not because it's not a good area, it's just because we don't have the ecosystem and the core competence and the other people who can do that better. So that's one area we'll stay away from. I think, remote working is, as I said, is becoming the new normal. So I think there's a lot of SaaS companies that are going to come up in the areas of customer engagement, marketing collaboration, cybersecurity, digital asset risk protection. These areas we know well. We'll continue to invest in those. We are seeing some different ease of consumption business models. Direct to consumer, you mentioned, is a big thing. We've got a portfolio company called ScaleFast that's growing very fast that does direct to consumer. They basically emulate the Amazon model, full stack, all the way from getting the order, shipping it, processing it for brands who don't want to be dependent on Amazon. So we're seeing a lot of that happen. So I think in terms of where we will focus, we are seeing a lot more laggard industries being disrupted by AI. So for example, we just made an investment in a company called AI Dash. What they do is they leverage satellite and third-party data to help utilities and telcos manage the remote assets. So big example, you saw the California fires this year. One of the big reasons that utilities have a problem is they don't know where the distribution lines are being encroached on by vegetation. And in order for them to do it, they have to fly planes and helicopters, very expensive, so they don't do it. These guys' software, they can do it at 1/20 at the cost. So we're seeing a lot of innovative companies coming up to solve those kinds of problems. So we'll continue doing that. So I think enterprise SaaS will continue to do. We'll focus on verticals where we have some domain knowledge, but we're also going to not be completely crazy and go into things that we know nothing about. B2C, we know nothing. So gaming, we are not going to go. Healthcare, we don't know much. We're not going to go into that. So I think we will try and stay close to what we know and experiment in a few new areas, but I'm not sure we're going to completely throw out a strategy and go in a different direction.
Yeah. Yep.
Yeah,
Daniel, what about you?
we are planning to stick to what we do, which is B2B software, right? We look normally into verticals like fintech, digital health, agriculture, cybersecurity is an area that we're very bullish on, especially now post-pandemic. I think everybody working from home without the infrastructure they had in the companies, right? So unfortunately, it's a massive problem now. So we did one deal in the segment this year. So we are sticking to our thesis like B2B SaaS. I think I'm also a big believer in AI. I think everything that's AI and machine learning enabled to really, grow in the coming years, to be honest. And we started looking to gaming, to your specific question, but not on the B2C side, which is something we don't do and don't plan on doing, but on the B2B. So I think there are several related industries or segments related to gaming that could benefit from B2B software to enhance their processes, right? So for instance, we invest in a company, AI SaaS platform this year in Israel, and one of their main clients is gaming industries, right? So they use B2B AI software to optimize customer acquisition and retention in gaming. So it's kind of adjacent industries and value propositions to gaming, which is an industry that is definitely interesting, but mostly specifically to B2C strategies, I guess.
Mhm. Yeah, and to conclude, this has been a tough year, but it looks like and it sounds like people in business are just sticking to being in business. And if you know something well, there is no reason really to change the industry focus because the industries you invest into are still relevant and they will stay. So there will be other opportunities, maybe developing business tools for existing businesses or figuring out the better way of deliveries and entertaining people when they stay at home. It's all good and well, but the basic industries are here to stay, and AI is here. We're not talking anymore about what will happen when it arrives. It's here. It's just a matter of mining it even deeper. But when entrepreneurs ask me, for example, what is the most important ingredient of a startup, and to me, it's always the team, because what this year has shown that entrepreneurs who want to stay in business, they're the ones figuring out a new way of dealing with the changing market, the changing environment, and we're there just to help. So what will be your advice to startups and potential entrepreneurs who want to start businesses going forward? Like the year 2020 is almost over, so January 21. I don't think anything will change, right? So what will be your advice, the parting words of wisdom to startups looking for funding in January?
I would say a few things. I would say, first of all, be thoughtful about kind of the business you want to build. I would say more and more we're seeing kind of in B2B full stack solutions. So with enterprise having to do more with less, they want to be able to have a frictionless model to get a new technology and deploy it. What they don't want to do is system integration, buy a 5-piece part from 5 vendors and deal with that. So I think that's important. Full stack is going to become important. I think leadership style. These entrepreneurs will have to blend, I would say, emotional IQ with digital savvy, required to build the culture that's required to build these next-gen companies that are combining the potential of human and digital interactions. I think it's early days of kind of work from home and all these things, but we're beginning to see signs of unexpected burnout attrition. Almost everybody I talk to, they say, if I do one more Zoom call, I just can't take it, right? So I think the leadership required to establish company culture, build and maintain emotional connection will be very, very important in this new workforce era for startups, as well as traditional enterprises. And I think this will require both human and digital cultural competencies. And I think these are things that will separate the wheat from the chaff in terms of entrepreneurs who build the next generation successful companies. If you look at, Sasha, in my experience, in the 2001 downturn, the dot-com bust, the 2008, all the great companies that came out of those recessionary times are still here. And I think this is the time to basically invest and build great companies.
Yep, agreed. Daniel, anything to add?
No, I agree as well. I think the time is now, and I think one of the things that I would say is be mindful of your team, especially on the leadership, right? How you build your team, how you build your founding team, how you build your first level of leadership in the company. I think having complementary skills have never shown to be so important as now, right? So having someone focus on the product, on the clients, on the finance, etc. I think having all these skills inside the company is extremely important. And I think another one is be mindful how you plan your cash runway, right? I think times are changing a little bit, and of course valuations have went high. There's a lot of money, etc. But the bar is going high as well. So I think be mindful how you raise money, how much you raise, what's the valuation, manage your cap table accordingly. I think those things are, I guess, although the valuations are really high, I think some of the crazy times in VC are almost gone, right? Just throwing money out there and see what happens. Because a lot of people actually realize the losses in the past 2-3 years. So I think be really mindful how you plan your next steps in terms of money, cash burn, etc., etc.
Well said. Well, thank you so much for being with us today. Happy holidays. Stay healthy, stay positive, and we will continue our dialogue anytime soon. Bye.
Thank you so
Great.
much,
Thank you
Sasha.
so much. Take care.
Thanks, Anik.
Yeah.
Bye-bye, you too.